Well, let's get straight to a CNBC-TV18 exclusive then. As the race for the RBI Deputy Governor's post enters its final leg, sources say that the search panel headed by the Cabinet Secretary has interviewed 7 candidates for the job. The Reserve Bank has 4 deputy governors and one position has been left vacant after Viral Acharya resigned in July, 6 months before the end of his term. Sapna Das joins us to fill us in with the names of the candidates who are believed to be interviewed. Sapna, who are the contenders?
Well, have been given to understand so far, and over the last couple of some time we have been looking at the story very closely. So what basically that we are picking up at this stage is the fact that possibly 1 RBI official, 3 IS officers and 3 economists possibly have been interviewed by this high panel search committee for the RBI DG vacancy. No guesses for RBI official who must have been interviewed. Given to understand that RBI ED, Michael Batra has been interviewed. Apart from that, the 3 IS officers that have been interviewed. Given to understand that possibly the current ED at ADB, Chhatrapati Shivaji, he's also a 1986 batch Maharashtra Kada officer. Probably he has also been interviewed. Apart from him, 2 more IS officers, Mr. Manoj Govil, he is a 1992 MP cadre officer, IS officer, as well as Mr. Arunish Chawla. And Mr. Arunish Chawla, by the way, is right now posted, with the Indian Embassy in Washington as the Minister Economic, basically looking into the economic matters as far as our country is concerned. So these 3 are the IS officers that have been spoken about. Apart from this, of course, 3 more economists, and clearly given to understand that possibly, Mr. Chetan Ghate, he's also the member MPC. Important position there. Possibly he's the front runner among the economists as far as his interviews are concerned. Now 7 candidates are in the fray and they have been interviewed is what we are given to understand. It will take possibly a month for the government to make up its mind and announce that 1 candidate who will become the 4th RBI DG.
Okay, Sapna, thank you so much for that. But moving on and talking about the earnings which are due today, Hindalco and Coal India will be reporting numbers and Nigel will tell us what to expect. Nigel, first up on Hindalco, what are we expecting?
Well, for Hindalco first, Anisha, Novelis and Elyris's numbers are far more important because close to around 70% of their total EBITDA comes in from both these 2 companies. So today we're looking at the domestic business. We're looking at the aluminum business, the copper business and the alumina business. Let's run you through the numbers first and the expectations. So in terms of standalone numbers, top line is expected to degrow by around 5% odd. Operating profit will decline by more than 25%. That would mean that margins will see a compression and the net profit is likely to see a big downtick, likely to come down by close to around 70% at around 75 to around 80 crores odd. One thing that everyone knows is that in fact base metals have been under big pressure in the last 1 year. So prices of both aluminium and copper, they have seen a downtick of around 5 to around 10% approximately in the past year or so. But some part of this negative impact is offset. Why? Because the rupee has been a little bit weaker and also they hedge some part of their aluminium sales. So close to around 15 to 20% of the aluminium sales would be hedged at around $2,100 per ton. The price in the past quarter on an average was around $1,800 per ton. So that's what saves them a tad bit. And also remember that alumina prices have come in lower. For Hindalco, they buy their alumina from Utkal Alumina Refinery. So that doesn't come under the standalone numbers. But if alumina prices are lower, then their transfer price is lower, which will help the standalone entity. In terms of volumes, what are expected? Aluminium business, remember, they're running at almost optimum capacity utilization levels. So around 320 to around 330,000 odd. That's the rough range. We are going with the number of around 324,000 odd. And in terms of copper, the base year, in fact, there was, the volumes are much lower. So on that low base, we're expecting a growth of around 8 to around 9%. 87,000 tons is what we're expecting. Now, in terms of expectations, we have a couple of brokerages that have put out those expectations. So the total aluminium EBITDA, that's alumina plus aluminium, we're expecting at around 900 crores, roughly 891 crores or to be precise. That's a degrowth of around 35%. Primarily, base metals prices are under pressure. And copper as well will see a sharp downtick of close to around 40%. Why is that? Because the treatment and refining costs, that's the TCRC margins, have seen a compression, and lower realizations of byproducts as well should pressurize them. So those are about the numbers, Anisha. We'll also watch out for management commentary in terms of how do they expect prices to base out from here. I think around 1:32 p.m. is when we should get these numbers.
Okay, so that was about Hindalco, but you clearly have a busy day for you. Coal India will also report numbers. What are you expecting there?
That's why I'm looking forward to tomorrow's holiday, Anisha. But Coal India, the numbers normally come in post-market hours. They're not expected to be a great set of numbers. And the top line, we're working with the degrowth of around 12%. The operating profit as well should see a compression of close to around 11 to around 12% odd. And the net profit should come in lower by more than 20% odd. First things first, we already have the sales volumes with us. So that's come in lower. The offtake is lower by close to around 11% at around 123 million tons odd. The production numbers as well have seen a degrowth of around 13%, coming at around 104 million tons odd. Remember, the past quarter has been challenging for Coal India in terms of the operational performance. We have had some shutdowns. The monsoons have led to some flooding at various pits, and also you had trade unions that went on strike for a couple of days. So that's what's impacted them. That's what led to some loss in terms of production as well as sales volume. The estimated breakup in terms of sales, we know that the sales volume is 123 million tons odd. But the crucial part is, what is the breakup? How much of it is FSA sales? How much of it is e-auction sales? And Motilal Oswal, they've given us their estimates. They're expecting the FSA sales to see a degrowth of around 7% at around 109 million tons odd. In terms of e-auction sales, they're expecting a sharper decline. So more than a 40% decline. They're working with a number of only around 10 million tons odd. Remember, if this number changes around, if there's higher amount of e-auction sales, that's what helps realizations and helps profitability. So keep an eye out on that mix. In terms of realizations, Motilal, they're expecting to see a decline in terms of e-auction realizations in particular. So e-auction realizations should see a dip of around 13%. Remember, global coal prices as well have seen a dip, while FSA realizations could see a bit of an increase from around 1,300 to around 1,320 rupees per ton. Finally, operating profit will get hit because volumes are lower, so negative operating leverage and lower e-auction sales as well as e-auction realizations. Hopefully these numbers don't come in too late today.
Okay, so that was about the numbers expected today, but let's shift focus to numbers that we got over the weekend. Ashok Leyland reported their second quarter earnings, and it was a rather weak set coming in from Ashok Leyland this time. Sonia is joining us to tell us what are the key details. Sonia, good morning.
Hi Anisha, good morning. Thanks a lot for that. So, for Ashok Leyland, the numbers were expected to be weak because we all know that the commercial vehicle cycle was under a lot of pressure. But the profits were much lower than expected because of a one-time loss. Now, this one-time loss included a lot of expenses that the company had to make. This one-time loss was of almost 65 crores. They incurred a loss last year as well, but that was less than 20 odd crores, and that's what really hit the bottom line this time around. Now, if you look at it, the margins were also down 500 basis points year on year at 5.8%. The expectation was 5.7%, so the margin weakness was in line with expectations. The revenues have halved year on year. The profits were down over 90% because of the one-time loss, as I mentioned. Just to give you some more details, the volumes are down 44% year on year, the lowest volume since Q1 of FY18. And not just that, I mean, if you look at the one-time loss of 65 crores, it includes a 17 crore provision for an obligation related to a subsidiary, a 45 crore provision on account of the VRS scheme. They had this last year as well, a 2 crore obligation due to discontinued products of the LCV division, and a loss in value of equity instruments in subsidiaries. So put together, they had incurred this huge loss. Now, if you look at the overall revenues, down 50%, EBITDA down 72%, and PAT down 92%. I expect the stock to be in the red today.
Right, Sonia, but stay on with us. What about Amara Raja? They reported the quarterly numbers. Margin expansion out there?
Margin expansion, Nigel, and you know what? Exide also reported a good margin. So Amara Raja has followed suit. I expect both these stocks to be in the green. For Amara, the margins were much better than expected. It was almost a 400 basis points year-on-year improvement that we saw, coming in at 17.2%. And it's the fifth consecutive quarter of an improvement that we're seeing in margins. The graph will also come up for you in a bit. There's also a lagged impact of a 7% fall that we had in lead prices last quarter. So that impact is flowing through this quarter, both for Amara as well as for Exide. So that's the positive. And the profits this time, like most companies, has been boosted by the lower tax expenses. So if you look at the numbers, the revenues were down about 3.3%, lower than street expectations at 1,695 crores. That's because the environment is challenging, as we know. The EBITDA went up 22%. The margins went to 17.2% versus 13.4% same time last year. Also, raw material costs as a percentage of sales has fallen to 65% versus 69.3%, last quarter. So that's been the big positive takeaway. And the margin trend will come up for you as well. As I said, it's been 5 consecutive quarters of an up move that we've seen in margins. So looking pretty good for Amara Raja batteries over there. The management also said that this quarter helped them improve their cash flows because of lower inventory costs on account of softer commodity prices. So I expect this stock to be in the green today.
Okay, Sonia, thank you so much for that. We'll let you go on that note. But on that note, we'll also slip into a very short break. Up next, Bank of Baroda and Nestle will